All right, let's get right into it. We're looking at a few things that, on the surface, seem totally disconnected. You've got a naval blockade, a crisis in the shadow banking world, and the price of oil. But what we're going to see is that they are all connected, part of one single chain reaction, a domino effect that could trace a line directly to your finances.
In international law, this is an act of war. I mean, that's not a line from a movie. That is the cold, hard reality of a decision that has put the entire world on notice. But it makes you wonder, what war are we actually talking about here? The answer, well, it's probably not what you think.
So yeah, the first domino to fall is a military action, but the real battlefield isn't the ocean. It's the global financial system.
It all started here. Picture this. 21 straight hours of tense talks between American and Iranian officials in a hotel room in Islamabad. It all ended with nothing. No deal, not even a plan to meet again. And when diplomacy fails that spectacularly, action tends to follow. The U.S. announced a full naval blockade, the kind of thing we haven't seen since the Cuban Missile Crisis.
But here's where it gets really interesting. This blockade isn't about stopping all the oil. No, it's about stopping very specific ships, the ones paying a new toll that Iran started demanding. And the critical detail, the thing you have to pay attention to, is how they're paying. It's not in US dollars, it's in Chinese yuan, and even Bitcoin. This is our first huge clue that this is about something way bigger than a regional squabble.
And this gets right to the core problem for the U.S. strategy. There's a fundamental imbalance here, an asymmetry of will, you could call it. For Iran, this is an existential fight. We're talking about the survival of their regime. For the U.S. administration, the stakes are mostly domestic, right? We're talking gas prices and presidential poll numbers. So you have to ask yourself, who can take more pain for longer?
Which brings us to our second domino. See, this conflict isn't really about Iran. Iran is a piece on the board, sure, but this is a proxy battle aimed squarely at America's #1 economic rival, China.
To really get why, you have to understand this one core concept. For half a century, the petrodollar system has basically been the engine of the global economy. The rule was simple. If you wanted to buy oil on the global market, you needed US dollars to do it. This creates a constant, massive built-in demand for the dollar, which in turn props up Wall Street and the entire American financial system.
So, when China and Iran show the world that, hey, you can buy and sell oil in another currency, like the yuan, it's not just a business deal, it's a direct challenge to that 50-year-old system. It's like finding a crack in the very foundation of the building that your S&P 500 funds, your pension, your entire portfolio lives in.
And with that in mind, the American strategy suddenly becomes crystal clear. It's all about targeting China's biggest vulnerability, its massive dependence on imported energy. I mean, think about it. China is the factory of the world, and what do factories need? Energy, oil. So by driving up the price of energy, the U.S. makes every single thing China exports more expensive. That slows down their economy. And where does money run to when the world gets scary? It flees to the perceived safe harbor of U.S. markets. It's a powerful self-reinforcing cycle.
But here's the thing. While all eyes are on the Strait of Hormuz, a second and maybe even more dangerous crisis is quietly brewing thousands of miles away on Wall Street. This is our third domino.
$3 trillion. That's the rough size of the private credit market. It's this enormous, unregulated corner of the financial universe where private funds, not banks, are lending money to all sorts of companies. And right now, it's showing major signs of stress. Investors are getting spooked and heading for the exits.
Now, does any of this sound familiar? It absolutely should. The parallels to the 2008 financial crisis are, frankly, terrifying. Back then, the ticking time bomb was subprime mortgages, all bundled up and insured with a financial weapon of mass destruction called a credit default swap, or CDS. While today, the risky asset isn't mortgages, it's these private credit loans, but the weapon is exactly the same.
And who's building this weapon? None other than JP Morgan. They're actually creating a new CDS index specifically for this private debt. They are literally manufacturing a way to bet on the failure of these loans. Just think about that for a second. The same banks that are tightening the credit lines to these private funds are also building a product to profit from their collapse.
So, here's the crucial part. This is how these two massive crises, a geopolitical showdown in the Middle East and a hidden financial time bomb on Wall Street, are about to smash into each other. Let's trace the path of these final crucial dominoes.
Okay, just walk through this with me. First, the private credit bubble pops in the U.S.
To stop a full-blown meltdown, the Federal Reserve is forced to cut interest rates and fire up the money printers. What does that do? It immediately weakens the US dollar. Now, at the exact same time, the blockade is choking the oil supply. So for the rest of the world, a weaker dollar makes that already expensive oil just skyrocket. Inflation absolutely explodes in Europe, but their central bank is completely trapped. They can't raise rates without crushing their own economies. So the shockwave just spreads, hitting mortgages, small businesses, and, you guessed it, pension funds.
And this is exactly why this isn't just some abstract Wall Street problem that you can ignore. A lot of these super risky private loans, they were sold off to public pension funds in the United States, and many international pension funds are in turn invested in those American funds. It's a hidden, interconnected web. So the shockwave doesn't stop at the US border. It can travel right through the system and hit the long-term health of your retirement savings.
So let's be clear. Even if the blockade ends tomorrow, the situation has already changed in a fundamental way. Certain things have been set in motion that are now irreversible. So what's the permanent damage here? Well, for one, the precedent is set. The genie is out of the bottle. The whole world is now seeing that it is possible to trade oil outside the dollar system. Second, those financial tools, the CDS market for betting against private credit, they exist now. You can't uninvent them. The fuse has been lit. The first and most important domino has already been pushed.
The events we've talked about, these aren't just distant headlines. They are the start of a clear chain reaction that connects global strategy directly to your personal finances. And that leaves us with one critical question to think about. The chain reaction has begun. Are you prepared for what comes next?